Credit card rewards are not free money. That sentence makes people angry because points feel like winning, cash back feels like a discount, miles feel like a secret travel hack, and every credit card ad wants you to believe the same thing. Spend money, get rewarded. But that is not the full game. The card company is not handing out money because it likes you. It is buying your behavior. It wants the swipe. It wants the balance. It wants the annual fee. It wants you to think about the reward before you think about the bill. And right now, that matters. Credit card balances are still around $1.25 trillion. Serious delinquency flows for credit cards remain elevated. Prices are still pressuring household budgets, and a lot of people are chasing 2% cash back while paying interest that can wipe out the entire benefit. So here is the uncomfortable truth. Credit card rewards can be useful, but they are only rewards if you are already in control. If you are not in control, they are not rewards. They are bait with better branding. This is educational content. It is not financial, legal, tax, or investment advice. The first trap is simple. The reward is small. The risk is big. A 2% cashback card sounds good, and if you pay the balance in full every month, it can be useful. But if you carry a balance, the math changes fast. Imagine spending $1,000 to earn $20 in cash back. That feels like a win. But if that balance sits there and starts collecting interest, the reward can disappear quickly. 1 month of interest can eat the cash back. A few months can turn the reward into a joke. And a year of revolving debt can cost far more than the points ever gave you. That is the part most people ignore. Rewards are loud. Interest is quiet. Rewards show up as a bonus. Interest shows up as a drag. And the drag is what matters. If you pay interest, you are not beating the card company. You are helping fund the rewards program. The second trap is behavior. People like to say, I was going to buy it anyway. Sometimes that is true, but not always. Rewards make spending feel productive. You are not just buying dinner. You are earning points. You are not just booking a trip. You are maximizing value. You are not just upgrading the hotel. You are getting more rewards. That language matters. It turns spending into a game. And games change behavior. You may choose the more expensive option because the category bonus is better. You may keep a card with an annual fee because you do not want to lose the benefits. You may buy through a portal because it feels smarter, even if the price is higher. You may spend more just to hit a welcome bonus. And now the card did its job. It moved your behavior. That does not mean rewards are evil. It means they are designed. And if you do not have rules, the design becomes your rule. The third trap is the annual fee. A premium card can look powerful. Airport lounges, travel credits, streaming credits, dining credits, hotel perks, insurance benefits. It feels like a VIP pass, but a benefit is only valuable if you would have used it anyway, at a price you would have paid anyway. That is the test. Not, can I justify the fee? People can justify anything. The real question is, did this card make my life cheaper? Or did it make my life more expensive while making me feel smart? If the annual fee is $600, you need a real break-even number. How much cash did the card actually save you? How many credits did you use naturally? How many benefits required extra spending? How many perks pushed you into a more expensive lifestyle? If the card requires you to spend more in order to save, that is not a clean win. That is a marketing maze. There are 3 types of credit card users. Type 1 is the controller. This person pays in full. They use autopay. They track categories. They avoid interest. They know the annual fee math. They treat rewards like a small rebate, not income. For this person, rewards can work. Type 2 is the drifter. This person usually pays in full, but not always. They open cards for bonuses. They sometimes carry balances. They do not always know what they are spending. They think they are playing the game, but the game is slowly playing them. This is the danger zone, because the drifter can look responsible from the outside, while the system is quietly getting weaker. Type 3 is the borrower. This person carries balances often. They use rewards to soften the pain. They think the card is helping because points are still coming in, but the math is brutal. If you carry credit card debt, rewards are not the priority. The priority is stopping the interest leak. That may mean using a simpler card. It may mean freezing new spending. It may mean building a payoff plan. It may mean using debit or cash for a while. Not because credit cards are morally bad, because interest is a machine. And if that machine is running against you, points will not save you. So how do you use rewards without getting used? Rule 1. Never chase rewards on money you cannot pay off. If the purchase needs interest to survive, the reward is fake. Rule 2. Auto-pay the full statement balance, not the minimum, not some random amount, the full statement balance. Rule 3. Separate spending categories before the month starts. Gas, groceries, bills, travel, restaurants. Do not let the category bonus decide your life. Your budget decides. The card follows. Rule 4. Audit annual fees every year. If the benefit does not beat the fee naturally, downgrade or cancel carefully. Rule 5. Do not treat points like wealth. Points can be devalued. Programs can change. Redemptions can get worse. Cash flow is real. Debt is real. Interest is real. Points are useful only after the real things are handled. So no, credit card rewards are not free money. They are a deal. And the deal only works if you control the terms. Pay in full. Avoid interest. Audit fees. Watch your behavior. Do not spend more to feel smarter. Do not carry debt for a few points. And do not confuse a reward program with a wealth plan. The best credit card strategy is boring. Use the card. Take the rebate. Pay it off. Move on. Because the real reward is not points. The real reward is keeping your cash flow under your control. Subscribe for more practical money strategy, financial literacy, and real-world wealth building breakdowns. And I will see you in the next one.